These are the most successful stocks you wish you bought 5 years ago. We're going on a journey and take a look at what would have happened to your money if you had invested $10,000 into each of them at the beginning of 2019. To make things interesting, we'll also invest the same amount of money into Bitcoin and see how crypto compared to stocks over the same period. While 6 of these investments would have increased your money tenfold, reaching $100,000 at some point, only 3 of them will be able to hang onto these gains until the end. Keep watching to find out which. In February 2019, Snap, the US social media company which runs the instant messaging app Snapchat, is at the head of the pack right out of the gate. In the first month alone, you would have already realized a 50% return on your investment. Keep an eye out for Snap, as this level is still far from the peak we reach later in the video. Just follow the little yellow ghost logo, which incidentally stems from Snapchat's original name when the app was still called Peekaboo. Carvana takes lead in April 2019. The US online retailer has been described as the Amazon of used cars and became the fastest-growing company in its sector on the back of a nationwide expansion program across the country, leading to impressive growth in revenue. Carvana was the fastest company to sell 1 million cars online. And at this point, you would have almost doubled your initial investment. In June 2019, Bitcoin begins its rally, tripling your initial investment in the first 6 months. This peak occurs shortly after Bitcoin Pizza Day on May 22nd, which celebrates the first ever real-world Bitcoin transaction when a programmer bought 2 pizzas for 10,000 Bitcoin in 2010. Those were worth $25 at the time and $312 million now. In August 2019, Starbucks reaches its highest level in our ranking after a significant jump in business following their expansion in China. The coffee giant is no longer just a physical retailer, but expanding into the payments business, with 1 in 4 in-store purchases already processed through the Starbucks app. And while we're on the topic of Starbucks, did you know that its famous logo drew inspiration from the book Moby Dick, as its founders wanted to convey a close relationship to the sea, just like its founding city of Seattle? However, we won't be seeing their famous logo for much longer on our chart, as Starbucks will soon be outpaced by some of the tech giants, which are now starting to really pick up steam. In December 2019, Tesla, today's most valuable automaker on the planet, makes its debut in our list. The company had its fair share of ups and downs over the years, even facing bankruptcy at one point. But 2019 marked a turning point as increased sales of its mass-market Model 3 helped to turn the company's fortunes around. This proof of profitability was what investors needed to kick off one of the most lucrative runs in stock market history. Tesla's Model 3 was meant to be released as the Model E, but Ford refused to give Tesla the name. This was the missing piece of the puzzle in Elon Musk's dream of releasing Tesla Models S, E, X, and Y, a lineup that combined to form the word sexy. Nonetheless, we're not too far off with the Model 3. We reached the last month before the world forever changed and global stock markets took a battering due to the global COVID pandemic. Over the next month, stock markets across the world will crash. The most impacted assets were those that had previously gained the most value since we began our chart, with the price of Bitcoin and the stock prices of Carvana, Tesla, and Snap falling off a cliff. In March 2020, Advanced Micro Devices, or AMD, the US semiconductor company that develops microchips, is now leading our list. But this is not because their stock increased in value during the COVID shock, but rather because they didn't lose as much value as some of the other key players we have seen so far. Computer chips will remain a theme from here on out as pandemic-related disruptions to global supply chains spark an unexpected surge in demand for microchips as remote work and an increasing reliance on personal electronic devices become the norm. And with Nvidia now ranking at number 3 on our chart, 2 of the top 3 companies are in the business of developing chips and graphic cards for computers and mobile phones. Stock markets were indeed shaken by the COVID pandemic, but only temporarily. To deal with the immediate panic, central banks across the world cut their interest rates and offered unprecedented support to investors and markets. But the disconnect between Wall Street and Main Street had never been so extreme. Hundreds of thousands of lives were lost, millions of people lost their jobs, and countless small businesses closed down. All this while stock markets started one of their greatest runs, reaching new all-time highs. In April 2020, Moderna emerges as one of the first beneficiaries of this new pandemic-era world order. The US biotech company brought a vaccine candidate into clinical trials in the spring, leading to large gains in its share price and for early investors, despite having 0 federally approved drugs on the market. Investors put a lot of hope into the name, and it's justified. Keep an eye out for Moderna, as over the next couple of months, the company will generate billions of dollars in revenue from its vaccine, catapulting its stock price to levels never seen before. By June 2020, a second wave of COVID beneficiaries emerge. They're not involved in the production of vaccines like Moderna, but instead benefit from how COVID changed the way we spend our time and money. People stuck at home still need to work and exercise. Zoom offers a video communications platform and benefits from businesses forced to set up work-from-home solutions. In 2020, Zoom was the most downloaded app on the planet and hosted more than 3 trillion minutes of conference calls as the world was locked away and working from home. Peloton has been described the Netflix for fitness, selling exercise equipment equipped with internet connections for live-stream fitness classes. And their sales skyrocketed during the pandemic as people began setting up their home gyms. In July 2020, for the first time, Tesla takes the lead as it achieves a staggering 80% share of the electronic car market in the United States. In our ranking, they set a new record at almost $50,000 per share. However, keep watching, as their journey doesn't end here. By December 2020, our initial $10,000 investment has now reached 6-figure territory in just 2 years. Tesla's stock price skyrocketed in 2020 as the company produced and delivered more than 500,000 electric vehicles, compared to 360,000 the year before and only 600 cars 5 years ago. Also, in December, Tesla enters the S&P 500 index, which further increases interest in its stock because a lot of funds track this index and now have to buy the Tesla stock. Let's pause for a moment because this is huge. In January 2021, GameStop saw one of the most extreme short squeezes in stock market history when a new generation of Reddit investors, armed with stimulus money from the COVID pandemic and free time from lockdowns, decided to take advantage of the company's low stock price and high short interest. Retail investors took on professional hedge funds to drive up the stock price of the struggling US video game retailer to exponential heights in the space of 1 month. If you had invested $10,000 into GameStop, your money would now be worth more than $250,000. Please check out my other video to better understand the stock market and the GameStop frenzy. In the shadow of the GameStop saga, it goes almost unnoticed that Moderna is our third stock that crosses the $100,000 barrier. March 2021 sees one of the more extreme examples how COVID impacted asset prices. The pandemic shutdowns and government policies drove investors' fears about the global economy and catapulted the price for one Bitcoin to record levels. and your initial investment is now worth more than $170,000. Bitcoin also got further support from a familiar name. Earlier in the year, Tesla disclosed they purchased $1.5 billion worth of Bitcoin, and Tesla owner Elon Musk added the Bitcoin hashtag to his Twitter bio, a move that helped push up the price of the cryptocurrency by another 20%. Estimates show that Tesla made more money from its Bitcoin investments in 2021 than it did in profits from selling cars in all of 2020. Similar to GameStop, other stocks with significant short interest explode in value at this time. Not to the same extreme, but enough for US movie theater chain AMC Entertainment to make a brief appearance in our top 10. Stocks in AMC Networks, which is completely unaffiliated with AMC Entertainment, more than double in the first half of the year, not because there was high short interest, but just because the names sound similar. In the same month, we see our fifth investment breach six-figure territory, with Snap joining the $100,000 club. Carvana reaches its all-time high in the summer of 2021, with a peak above $90,000. The COVID pandemic creates supply chain issues and a global chip shortage for car manufacturers. This slows down production of new cars and pushes a lot of customers towards buying a used car instead, a goldmine for the company. But unfortunately for Carvana, things are downhill from here. A journey that began in the spring of 2020 now reaches full force when Moderna in September 2021 reaches its all-time high as investors funnel their money into vaccine stocks. But the descent also begins here, and a decline in vaccine demand weighs heavily on the company's earnings. And whilst Moderna will remain in our top 10, it no longer enjoys the stellar growth in its share price that it had become accustomed to. Did you happen to notice that we have already lost former COVID favorite Zoom in our top 10 ranking? Zoom fell off our chart in August, and now we say goodbye to Peloton in October. Times are changing, pandemic restrictions are gradually easing, and demand for the company's products plummeted along with their revenue. Peloton is already down 40% from its peak in October and will lose another 50% of its value over the course of the next month. And today, Peloton trades at 97% below its all-time high. Tesla ends 2021 at the top of our list. 2 months earlier, the company reached another milestone when it became only the sixth company in US history to reach a valuation above $1 trillion. And whilst Tesla's value still lags Apple at $2.5 trillion and Microsoft at $2.3 trillion, none of these matched the speed at which Tesla reached this milestone. After its initial public offering, it took Tesla only 12 years to reach a $1 trillion valuation, compared to 37 years for Apple and 33 years for Microsoft. Tesla's valuation now reaches stratospheric levels. The company is now worth more than the 11 largest global automakers combined, including giants like Toyota, Porsche, Mercedes, BMW, Ferrari, Volkswagen, Honda, and General Motors. As 2022 rolls around, the world settles into a new post-pandemic normal. COVID begins to look like a distant memory, and with it, the fortunes of pandemic-era stock market darlings like Carvana, once the leading online car retailer during the pandemic. As investors become more and more concerned with the continued fall in used car prices, we see Carvana fall out of the top 10. And what's more, it is highly unlikely we see them back in the top 10 in the near or mid-term future, as their stock will lose 98% of its value throughout the remainder of 2022. Your $10,000 investment, which peaked at $90,000 in July 2021, will only be worth $1,000 in December 2022. Similarly, Snap also takes a beating in 2022. Another company that benefited immensely from the pandemic as people forced to stay at home flocked to social media, sees its business slow down as life returns to normal. Their stock falls by more than 80% over the remainder of 2022. Eli Lilly, the US pharma giant, is our latest addition to the top 10, and they're here to stay. The company sells 1/3 of all insulin in the United States, which is the main driver of the company's revenue. This is a drug that more than 8 million people in the US depend on, and a product with one of the highest profit margins on the planet. In October 2022, Broadcom becomes the third semiconductor company to enter our top 10, joining Nvidia and AMD. Broadcom has since signed an exclusive multi-billion-dollar deal with Apple, who are increasing their relationship with domestic suppliers. This deal helps keep Broadcom stock in our top 10 until the end of our video. Our Bitcoin investment, which 1 year ago was worth almost $180,000, now falls below $50,000. In a brutal year for the wider market, the cryptocurrency loses 60% of its value amidst the collapse of various crypto firms, including the bankruptcy of crypto exchange FTX in November, which shatters investors' confidence in the whole digital currency market. In a far cry from where things stood just 1 year ago at the end of 2021, Tesla also closes 2022 with the worst year in its history, losing 2/3 of its value, which sees $700 billion of shareholder value evaporate on the back of investor concerns about disrupted production, reduced demand, and Tesla CEO Elon Musk's new focus on Twitter. Moderna ends the year in top spot again, though in order to maintain profitability, the company since increased the price of its COVID vaccine in the US by 400%, to more than $100 per dose. In May 2023, Nvidia crowns the recent dominance of semiconductor stocks. Demand for their products explode with the massive growth of artificial intelligence, and investors pour money into these stocks with the expectation that AI technology, such as chatbots, digital assistants, and robots, will be a game changer for businesses and society. Now it's time for a recap. We end 2023 and our 5-year look back with 3 stocks that would have increased your initial $10,000 investment by more than 10 times: Nvidia, Tesla, and Bitcoin. 2 stocks hit the 100,000 mark during our journey, but lost ground as time progressed: GameStop and Moderna, leaving you with around $50,000 on your initial investment. 1 stock hit the 100,000 mark and completely collapsed, falling out of the top 10 and down to $1,000 again. Snap. If you enjoyed this video, please like and leave a comment. And if you want to see more content like this, please subscribe to my channel and turn on notifications.